Today, crypto prices inch higher as stocks are in the green. Families of the victims of the October 7th attacks by Hamas are suing Binance. And Pantera's Cosmo Jiang breaks down what's fueling the crypto sell-off and what to expect for prices in 2026. Welcome to CNBC's Crypto World. I'm Talia Kaplan. Major cryptocurrencies inching higher this morning as stocks are on the rise ahead of the Thanksgiving holiday. By noon Eastern, Bitcoin rose 0.8% and traded at $87,800. Ether gains more than 0.5% and traded at $2,946. And Solana Sol token gained 0.75%, trading at $137. Okay, let's talk about the top stories. Dozens of families of the victims in the October 7th attacks in Israel by Hamas are suing Binance. The lawsuit filed in U.S. federal court alleges that the crypto exchange knew Hamas, Hezbollah, and other designated terrorist organizations were transacting regularly on the platform. It also alleges founder Changpeng Zhao and a close associate designed the crypto exchange, quote, as a criminal enterprise to facilitate money laundering on a global scale. Binance declined to comment on the lawsuit, but did say in a statement that it fully complies with international sanctions laws and has executed a wide-ranging transformation of its sanctions framework in recent years. That transformation came in part after a record-breaking multi-billion-dollar settlement with the U.S., which also saw CZ head to prison. CZ also just received a controversial pardon from President Trump, who argues the Binance founder was treated unfairly. You can read the full story about the lawsuit over at CNBC.com. Next, Swiss crypto bank Amina successfully completed a transaction using Google Cloud's Ledger technology. Amina said in a news release today that it worked alongside partner Crypto Finance Group to allow banking partners to settle payments almost instantly using Google Cloud's Universal Ledger. Crypto Finance served as the designated currency operator, which defined and observed compliance with transaction rules, while Amina and other banks embedded the technology into their banking infrastructure. Amina said in the news release that the pilot demonstrates how distributed ledger technology can modernize cross-border, cross-currency, and point-of-sale use cases. Tokenization and distributed ledger technology is seeing a growing interest among traditional financial institutions as they look to speed up payments and settle 24/7. Finally, focusing on a prediction market boom, Robinhood is expanding its investment in this space, announcing a partnership yesterday with market maker Susquehanna International Group to manage Ledger X, a futures and derivatives exchange and clearinghouse once owned by FTX. The announcement mentions prediction markets have been a fast-growing sector for Robinhood, having onboarded more than 1 million customers since its launch 1 year ago. Robinhood says 9 billion contracts have been traded in that time. As of noon, Robinhood shares popped more than 8%. This also comes after Polymarket yesterday announced the CFTC cleared the prediction markets platform to return to the U.S. Meanwhile, Coinbase's VP of product told CNBC back in July that the crypto company was working on its own prediction markets initiative. All right, let's zero in on markets for our main story. I spoke with Cosmo Jiang, general partner and portfolio manager at Pantera Capital, about crypto's November sell-off and what to expect with just a few weeks left in 2025. We've seen this big crypto sell-off recently, with Bitcoin struggling in the 80,000s. Macro factors like economic uncertainty, labor market concerns, and more are headwinds, but so are concerns around tech stocks and AI companies. I think one bright spot is that investors are increasingly confident the Fed will cut rates in December. In fact, according to the CME Fed Watch tool, traders are pricing in a more than 80% chance of a 0.25 percentage point cut from the central bank next month. What's your take on the factors driving the price of Bitcoin and other cryptocurrencies right now?
Well, whenever I think about the market, I try to think about what's affecting the broader macro market and then what's idiosyncratic to the crypto industry. And zooming out from a macro perspective, a lot of the things that you just said are absolutely showing up. One is, we track earnings very closely and to get an understanding of how the underlying economy is doing. And it's pretty clear as over the last quarter that consumer company earnings are starting to show really mixed signs and this widening of what people call the K-shaped recovery, where lower income consumers are feeling a lot worse than higher income consumers who have been helped by the wealth effect. And so that's worrisome because that's not sustainable for the long term. There's also bubbling credit quality concerns where there have been a lot of frauds that have been uncovered in the private credit space. And then, overall, the big thing that's been driving risk markets has really been the AI capex spend and on the productivity that hopes to bring in, but certainly that today the employment and the growth it's bringing, and everyone's now worried about bubble fears. I think all those are overdone, but certainly that is the topic du jour. At the same time, the Fed has gone a little bit back and forth on how they're thinking about December cuts. If we go back just a month ago to before the October FOMC meeting, the market was actually pricing in 100% chance of a Fed cut in December. And then after that meeting, when they struck a hawkish tone, they actually lowered all the way to 30%. And it's now back up to 80 as there's been a lot of back and forth and economic data indicators have come in weaker. And so now the Fed is more likely to cut, but maybe for the wrong reasons, which is because there's a weakening environment. And so all that is weighing on risk sentiment. When we look at crypto specifically, I'd say there was a very large sell-off that began starting on October 10th. And that event ended up being the largest liquidation in crypto's history. Over $20 billion of interest, open interest or positions were taken out and liquidated. And so after any massive event like that, we're just going to see a long period of digestion as people pick through which counterparties are doing okay and reevaluating their risk positions. And so in the same backdrop, if at the same time the macro markets are slowing down and crypto is going through this digestion period, we're going to see pretty meaningful pullbacks. And so I think that's just what we're going through right now. We're just seeing this natural consolidation and digestion. But ultimately, I think, as markets do, we will climb the wall of worry, and things should be back to after we get through digestion period, I think things should be back to climbing to new highs.
So in a nutshell, what's your outlook for crypto prices as we approach the end of the year, and what can people expect in 2026? What would it take for Bitcoin to potentially surpass its new record reached in early October above $126,000?
I think in the very near term, as we approach the end of the year, we're going to continue to get a little bit of chop. I do think that all the technical indicators on a short-term basis suggest we're near a low, whether that's the relative strength indicator or RSI reached oversold levels at any time in crypto's history. When that's happened, there's generally been a rebound, unless we're going into a sustained bear market. The fear and greed index, which measures market sentiment, is also at historic lows, matching after the Luna blow up and after COVID. And so clearly sentiment is an all-time low, and leverage indicators suggest positioning is very light. So a lot of people have taken off a lot of risk, and there's not a lot of leverage left in the system. All that suggests that we're near a low. Now, that doesn't necessarily mean we have to rally. In order to rally, we really need to see the broader risk markets start to get better, and so we need equities to start pushing back to all-time highs. We need clarity on what the Fed is going to do on December 10th, their next Fed meeting, and then we hopefully get a couple additional positive fundamental news on the crypto front, whether that's additional institutions adopting digital assets. I think it'll take time for all that to play out. So through year end, it's sort of a tough call, but I do think by early next year, call it end of Jan, end of Feb, we will be back to pretty strong markets, or we have a really high probability of being back to really strong markets because we've already been so oversold, because sentiment is so low, and at the same time the positive drumbeat of institutional adoption just continues.
Now, we have seen some major regulatory developments for crypto here in the US this year, with the Genius Act stablecoin bill becoming law over the summer. Now, all eyes are on crypto market structure, and many in the industry hoped we would see that advance by the end of the year. However, after the longest government shutdown in history, that is looking unlikely. So if Washington starts to fall short of expectations for digital assets as the midterms approach, could that prove to be a risk to Bitcoin's price in 2026?
I actually think the market isn't pricing in a lot for market structure legislation, and that's actually a very undercovered topic. As much as when we're in the day to day, it's very easy to get caught up in the headlines of is this going to happen today or tomorrow? But if I just zoom out a little bit, the speed and pace with which legislation has happened in the crypto industry this year has surpassed anyone's most positive expectations. When you think about the Genius Act or the stablecoin bill getting passed in July, and effectively getting written and passed and signed into law within 6 months after inauguration, that is the fastest that anyone could possibly expect our currently pretty cobbled political establishment to get something done. And so that itself was a pretty tremendous signal of how aligned everyone across both sides of the aisle are in getting crypto legislation done in a timely manner. And then, the second large bill you mentioned is the market structure legislation that which we're looking for. I think that will meaningfully unleash innovation. The reality is, progress on that has also continued to exceed expectations. We were just going through, we just had the longest government shutdown in U.S. history, and during that time, news came out that right after the Senate came to an agreement or on a bill to extend the government extend government funding and and push back the shutdown. At the same time, they also published a draft of the market structures legislation. Just think about that. While they're going through the largest shutdown in the U.S. government's history, they still made the time to draft market structure legislation. And so I just think that's so incredible and speaks to, again, how aligned and how excited everyone is to drive this industry forward. And so, look, I don't have a strong view on whether that means it gets done this year or perhaps early next year, but it's just very clear that this is a very high priority for them. And so, we'll figure out, or we'll see how fast the government can actually move. But clearly, crypto legislation, I would think, will continue to move at a faster than expected pace relative to everything else.
That's a good point regarding the Senate Agriculture Committee releasing its draft of crypto market structure during that time. But focusing on stablecoins, we have seen a lot of interest from major institutions like JP Morgan, Bank of America, and Citigroup after the Genius Act was signed into law. Even Walmart and Amazon are exploring issuing their own stablecoins. And just this week, buy now, pay later platform Klarna announced the launch of its stablecoin in an effort to make payments faster and cheaper. What do you think about all these big names moving into the stablecoin space? And do you think this trend will continue into 2026?
We are incredibly bullish on the outlook for the stablecoin industry. Stablecoins today are around $300 billion in circulation. I think it would not surprise me if we reach $1 trillion in circulation in the next year. So more than 3x over the next 12 months, and probably 10 trillion over time. This is well above, I think, what the street and other research analysts are modeling, because I think people just don't understand how disruptive this is yet, or appreciate how disruptive it is. When you think about what makes stablecoins special, it's really four characteristics. It is that, one, they're faster; two, they're cheaper; three, they're global and globally accessible from day one; and then four, they're composable, which means it's very easy for other people to adopt them and build on top of them. And all those reasons are why it's a very disruptive and a huge evolution and improvement to our existing financial rails. That's why we're seeing all these large organizations, from Stripe to PayPal to Klarna or Western Union, launching stablecoins. And in fact, a lot of them are choosing to launch them on high performance blockchains like Solana. And so I think we're going to continue to see that happen. And it's going to continue to surprise people surprise people who aren't familiar with the industry, how quickly stablecoin adoption is going to take off.
Okay, that's all for Crypto World today. We'll be back again on Friday after the holiday, and we'll see you then. Happy Thanksgiving, everyone.